Hello everyone, welcome to the Audit and Attestation classes on Overview of Audit and Attestation. This is part 2 of the Overview of Audit and Attestation. Please look at part 1 as well before jumping into the part 2. And in this part 2, we'll be studying in detail about ethics, independence, professional conduct, terms of the engagement, requirement of audit engagement documentation, and the communication with management and those charged with governance. And last topic we will be covering in this video is the firm system of quality control, including the controls over the engagement. Let's dive into.
Hello, welcome everyone. Sorry for the inconvenience. Let me quickly present my screen and we can go from there. Right, so there you go. Right. So far we have covered on nature and scope of audit, which include like audit engagement, conduct under the Government Accountability Office and Government Auditing Standard. Then we covered about other engagement. Now we are in 2.2, which is ethics, independence, and professional conduct. So like we all are CPAs, right? So we all are being abide by certain rules and regulations. And as we are a member of AICPA, who is a governing body, they issue certain rules and regulations for which we all need to follow, whether we are in practice, whether we are doing job, whether we are an educator, like whatsoever is being our profile, there are certain rules and regulations which as an CPA, we always need to follow. So those comes under the AICPA Code of Professional Conduct. So what is AICPA Code of Professional Conduct is basically defining what are the do's for the professional and more importantly, what are the don'ts, right? And then next thing is requirement of Security Exchange Commission. So like how in India, we have SEBI, who issue rules and regulation for the public company India. Same way in US, we have Security Exchange Commission. They issues rules and regulation for the listed companies in USA, right? So there they issue rules and regulation for the CPAs who are working in the listed company and at the same time to the professional like us who are being auditor of those listed companies. So they issue rules and regulation for both, right? And same way, next one is Public Company Accounting Oversight Board. So Public Company Accounting Oversight Board, or you can say Security Exchange Commission, they comes under direct laws of the government of USA, which are reporting to the federal government of the USA, in which they have issued like back in 2002. When there was a lot of scams were happened in US, especially like Enron, then Lehman Brothers and other scandals which were happened. After that, this SOX 2002 has been formed, right, which comes under the committee of PCAOB. So PCAOB committee has been formed back in 2002 to govern the overall, you can say, work of the CPAs of US, especially to those practicing professional, right? In which like we have seen like people were signing or CPAs were signing the financial statement without doing much adequate, you can say, inquiry, audit, looking at evidence, inspecting those documents and just doing it based on like the value and the fees they were receiving it, right? So to stringent those, you can say, parameters to maintain those quality standard, the PCAOB has come up with the SOX 2002. So which also will be covering in detail in third chapter here, right? Next one is requirement of Government Accountability Office and the Department of Labor. So like I said, being a CPA, you will be auditing the government entities as well as the entities who has received the funds or financial aid from the government. So for them, you need to follow the governmental auditing standard. At the same time, you need to follow the professional standards. Being a CPA who are being involved in the government entity or who are auditing the government entity or who are auditing the funds and trust which is being supported by the government. So you need to adhere to those rules and regulations. Have any of you heard about 401k, right? Retirement funds, retirement plans. Have you guys heard about 401k? Anyone?
Yes, Kamal.
Right. So what is that, Jatin?
So it's basically a retirement plan in US.
Mm-hmm.
So employees contribute to it and
Yeah.
then they are given certain benefits after they retire.
Yes, so absolutely true. So like 401k are the retirement benefit plans which are being structured, unstructured, semi-structured, all category. We are not going into it, but there is a Department of Labor which issues certain professional standard. When you are auditing to those funds which are for the benefit of employees, then you need to adhere to those professional standard which is being issued by the Department of Labor, right? The next one is professional skepticism. So this is not any rule, not any regulation, or not any professional conduct. It's more about mindset. Have any of you heard about this term before, professional skepticism?
Yes,
Or
Kamal.
anyone would like to add? Yeah.
Yes, this means like having a questioning mindset all the time. We should not blindly rely on whatever the client says. We should dig deep into the details and believe only the facts supported by evidence.
Yeah, so that's very true. Very well defined, Jyotin. So exactly like the professional skepticism is basically a questioning mindset. Whatever like client is just sharing with you, you are just not blindly relying that whatsoever the client has shared is being right. It is more important for you to dig down and understand whether those documents, support, clarification, information which the client has given to you is being making sense or not as a reasonable person, right? So that is what,
like we trust client, but we need to verify it.
yeah, trust but verify. Yeah. That's very true, Sanchit. Next one is professional judgment. Again, there is no thumb rule for the professional judgment. It's just like reasonableness of anything that management is estimating, right? For example, like warranty provision for leave encashment, provision for any benefits, or maybe litigation claims, right? Or maybe sales or incentive commissions calculation, any such thing in which like judgment of the management is being involved. So here, as an auditor, as a CPA, it's being our responsibility to test those judgment, test those estimates to ensure whether those estimates and judgment which management has taken is reasonable or not, right? So this is all comes in 2.2, which is ethics, independence, and professional conduct, right? Any doubts so far on nature of engagement, nature and scope of engagement, ethics, independence, and professional responsibility? So far, so good. Okay. So third one, yes, Rajat.
We are good.
Good. Okay. So next topic we have in this audit section of exam is terms of engagement, right? So terms of engagement, what do you understand as a layman? Terms of engagement mean what is being agreed between the two parties, right? What we draft for the terms of engagement is engagement letter, right? So as an auditor, for any engagement, whether you are doing audit engagement, you are doing attestation engagement, review engagement, compilation engagement, right? Or agreed upon procedure, or maybe your consultation engagement, right? Maybe tech services engagement, whatsoever the engagement you'll be doing, it's being your responsibility to ensure everything is right? And the terms of the engagement is being clearly laid down, the scope of work of the professional, that's CPA, and the scope of the work of the management as well. So that in future there should not be any dispute among those two parties, right? So first one, if you see the audit engagement. So audit engagement is include your audit of financial statement, audit of internal control, or you can say combined audit for the financial statement as well as internal audit. This may include group audit. This may include component audit, right? This also include like your attestation engagement, review engagement, agreed upon procedure. So whatsoever the engagement you'll be doing for any entity, individual, partnership firm, trust, or whatsoever be the corporation, whether it's an S corporation, C corporation, LLP, LLC, whatsoever it would be. So it's being your primary responsibility to make sure all the scope of work is being clearly laid down in an engagement letter and is being appropriately signed by the client, right? Then next topic is communication with the management and those charged with governance. If you see the sequence, first of all, we are understanding the nature and scope of engagement. Then we are preparing ourselves for the professional responsibility, code of conduct and professional responsibility. Then we are signing up an agreement that this is the scope of work which we are planning to do. Now, if you see the fourth topic, which is communication with management and those charged with governance. That means you will be setting up the tone at the top or the way of communication with whom you'll be discussing all the respective and related matter. So here, like management, and there are two parties here. One is management and second is those charged with governance, right? So anyone would like to share what is management and how it is different from those charged with governance? Any idea?
Management is a group of people who is involved in the running the operations of the company, and those charged with governance are like directors, managing directors.
Yeah, makes
Basically,
sense.
oversight board is called as those charged with governance, and the person or the group of person who is engaged in the daily operation and everything that comes under management.
Yeah, so management include senior management, right? And which include like CEO, CFO, CTO, right? Or maybe like vice president, those kind of senior level management people. And yes, those charged with governance are for the private company, it's board of director, you can say, and the shareholders. And for the public company, generally audit committee is considered as a those charged with governance, right? So here with communication with the management and those charged with governance, what type of communication you'll be making to them? So one is the scope of work, the engagement letter, right? It has to be signed by those charged with governance or management, right? Then second, when you are doing like, you'll be communicating to them the overall scope of your work. At the same time, you'll be communicating them timing of the work as well. That has to be principally agreed between the management, those charged with governance, or the CPA when you are planning to conduct the respective audit. Like for example, a big listed company, you might be doing quarterly reviews, you might be doing interim audit, you might be doing certain certification, and you might be doing the final audit. Right, so all these timelines should be in advance agreed among the management, those charged with governance, and the CPA firm. Right, for example, the company is following, let's say, Jan to December financial year. Right, for Jan to March is the Q1. So when the management is finishing off their financial statement or quarterly review, right, which is being available to the auditor for their limited review. So those timelines to be clearly and precisely mentioned. For example, like if you have seen in your experience also, generally like 7th day, 8th day, 10th day, management commit that they will be finishing off their accounts and giving you the financial statement for your review. Right? Then after you take certain times, maybe 15 days, 20 days, 25 days to finish up your review. So those timelines to be agreed among the management and the CPA firm in advance, right? Same way for the interim audit. Like earlier, in earlier days, we used to plan the interim audit in October and November. But nowadays, things are changing and like we are doing in advance audit. Like for example, generally we take June as a cutoff and we do certain procedure for the half year and then we do second round of interim audit in the October month. It will ease out the overall operation and it will give more, you can say, better utilization of our resources as well, and it will give you timely insight for anything can go wrong in the overall operation of the company, right? So that's the objective, and those are timelines you need to agree when they will be issuing like final financial statement and what is the date in which they want to file with the Security Exchange Commission for limited reviews. Like within 45 days from the close of the quarter, it's been mandatory for the company to file their quarterly review report with the SEC in the form of 8K, right? Same way for the annual financial statement, within 60 days, they need to file with the SEC for the listed company. So these are the timelines for the listed company. And for the private company, it is 90 days. Right? So within those timelines, you need to agree what is the board meetings date, right? In which like board is planning to approve their financial statement, and accordingly you do the backward working for your entire plan, right? Those all timelines need to be timely communicated and agreed among the team member like CPA firm as well as with the management. Second thing you will be communicating is the internal control related matter, right? During the audit, you will be doing testing the design of the internal controls, right? And if you are issuing ICFR report, then you'll be testing the operating effectiveness of the internal control as well, right? During your review procedure, during your interim audit or final audit procedure, if you find any control deficiency, right, that also need to be timely communicated to management and those charged with governance so that they can take appropriate action for it, right? Those all communication need to be timely communicated, and after that final audit report, that is also mandatory, required to be communicated to those charged with governance, right? So these all things will be covering in 2.5. 2.6, which is the last topic in second chapter, is firm system quality control, including quality control at the engagement level. So here in this topic, there are the two things we need to keep in mind. One is at a firm level, what are the quality controls that firm is following, right? Whether the firm is maintaining adequate documentation for all the engagement or not, whether the firm is ensuring the timely compliance of the reportings or not, right? Whether the firm have sufficient number of engagement partners or not, whether the firm is timely rotating the engagement or not, right? Whether the firm have like L&D department, learning and development department or not, whether the firm is timely doing training to their staff or not, whether the firm have quality or you can say technical people to do the respective audit or not. For example, for the big company, right, you mandatorily have to have an IT audit expert, right? In India, we use visa, and in US, we use CISA expert, right? So for example, let's say you need to do the audit of Amazon. So just having a financial statement audit experience, you cannot do the audit of Amazon, company like Amazon, right? You must have the mandatory skill set for the IT expertise who are in IT domain expert to understand the volume of transaction, understand the accuracy of those transactions, and validate those transactions as well, right? Same way, for example, your company for which you are auditing, they are located in multiple geographical locations, right? And they have like certain tax litigation in those respective geographical location. But for all countries, tax laws, you probably may not be aware of. You would require to involve those tax experts, right, to validate those tax consultation, or you can say litigation, claims, assessment, whatsoever the management is producing, right? So those all things are being required quality standard that a firm need to maintain at a firm level, right? Have you heard about peer reviews, right? What is peer review? Sorry? Yes, yeah.
Didn't
So,
hear from class, but peer review, from my understanding, is reviewing the work done by your peers or contemporaries.
yeah, that's true. Anyone else would like to add? Rahul, Sandeep, Jatin, Rachita, Khushi, would you like to add what is peer review? Okay, so peer review, like there are two peer reviews. One is like from the AICPA. So AICPA bring all the CPA firm on board and request one CPA firm to do the review of the another CPA firm, right? In which they will be ensuring all the system quality controls of that firm level and then also at the engagement level. Same way for the listed company, PCAOB also do their reviews, That is also kind of peer review, but in which special panel of the PCOB will be doing the respective audit engagement as well as non-audit engagement and the firm level review, right? So these kind of reviews are also comes under the quality standard, whether the firm do have those quality standards or not, right? In addition to that, like some big companies are required to have a quality partner, quality engagement review partner. One is like engagement partner, who is a signing partner, and in addition to that, it has been mandatory to have a quality review partner, right? For all the listed company, when you are doing the audit engagement of the listed company, it is mandatory for you to have a quality review partner that is an independent partner than the audit engagement partner. So it's completely out of, you can say, different, it may be different office, different domain, different industry, different expertise, but not at all being the part of the engagement team will be working day and night for that respective engagement to ensure the independent set of eye looking at all the quality as well as audit methodologies and the all procedures you have performed to mitigate the risk of material misstatement as well as the risk of fraud, right? So those all comes under the quality control standard at a firm level and at engagement level. Firm. CPA. Like for example, this is 𝐂𝐶 Global Associate, a CPA firm, let's say, and I am doing, let's say, audit of, let's say, Pinterest, right? So for me, there are three kind of quality check. One is like, let's say, 𝐂𝐚𝐿 is engagement partner of the Pinterest audit engagement, right? And then I would be involving, let's say, 𝐴𝐿𝐻 as a quality review partner. That means myself would be doing the complete review of all the work that engagement team has done. And then 𝐴𝐿𝐻 will be independently reviewing all the documentation. He or she will not be coordinating with the client, but all the documentation which we have done throughout the audit and all the conclusion which we have reached, especially for the risk of material misstatement and fraud risk area, or where like special estimates or judgments are being involved. So 𝐴𝐿𝐻 will be independently reviewing those areas and sharing their comments with me. And then if there is any improvement or additional work is required, then it's been my responsibility to take care of those. No, I'm coming to that. First one is like internally. Let's say in 𝐂𝐶 Global Association, 𝐂𝐚𝐿 is a partner and 𝐴𝐿𝐻 is a partner, right? So, and I am doing a listed company which is Pinterest audit. So then as a firm, I have to have a policy to appoint a quality review partner within the firm who is independent to this engagement, right? One is this. Second is, let's say Jatin and let's say Rachita have a separate CPA firm, right? And then AICPA has appointed Jatin and Rachita to review the work of 𝐂𝐶 Global Pinterest engagement, which we have performed the audit. That is called peer review. Like I am a CPA firm, Rachita and Jatin is a separate CPA firm, and they are coming to my firm and reviewing all the documentation of the audit I have done for the Pinterest audit engagement. That is called peer review, which has been appointed by the AICPA, right? Third one is the PCOB review. PCOB appoint the independent professional under the panel of PCOB, right? It can be from Deloitte, it can be from KPMG, it can be from Gunmeyer and Company, it can be from Jatin and Rachita and Company, and it can be from 𝐂𝐶 Global. So there would be a panel of people, let's say 5 professionals. One is from Gunmeyer and Company, one is from Jatin and Company, one is from Deloitte, one is from KPMG, one is from PwC. So these 5 people has been appointed by the PCOB to review the Pinterest audit engagement done by the 𝐂𝐶 Global. Then 5 of you would be coming to the 𝐂𝐶 Global and reviewing all the work we have performed for the Pinterest audit engagement. That is called PCOB audit. Right? Make sense? Yeah. So I have like 3-time experience with PCOB. Yeah, first one is when I was in 2010 was auditing this Goodyear, and second for the GlaxoSmithKline, and third is with General Motors. Right. So this is all we'll be covering in chapter 2. Right. Any doubts so far? Yeah. Pranjali, Khushi, Vineet, Sanchit. So far so good.
Yes, sir.
Okay. So ready to dive into chapter 3?
Yes, sir.